Hello guys, and welcome to my YouTube channel once again. In today's video I want to show you guys a way you can actually analyze the market using price action, and you'll be getting very high probability setups. All right, just pure price action, guys. All right, so I'm gonna it also is it's actually my strategy, but I'm trying to see if I can make it look very simpler and easier for a lot of my fans and subscribers who've been struggling to master this strategy, guys. All right, for example, what we have on the screen, because we're actually going to be using this particular pair in this video, crash 500 index, and you can see I am on the 4 hourly time frame. All right, so what we're going to be doing is this: if you just open a pair, then you stay on a higher time frame. You stay on a higher time frame. You look at the structure the market has created. Right now, you can see I already drew a horizontal line right here because of this place I drew it initially, and you can see that the market bought up to this level. There was a little consolidation here. The market finally broke out of it, got to this level, sold back to this same zone, then still bought up and then still came back. Now, the things you have to be looking out for is the market movement. If you're able to master market movement, it will increase your chances of being profitable. If you can understand market movement, you see the way the market is moving, then you understand the reasons for the movement, and you can easily predict if the market is actually going to reverse on getting to a zone or not. All right, so because, for example, look at what we have here. Look at what we have here, guys. You can see the market bought nicely to this level, then started selling. This selling at this point is not a smooth sell. You can see there were buys and sells around here, the bullish and the bearish candlesticks. Then we have these wicks also. The wicks of the candlesticks on higher time frame indicate buying and selling activities. On a lower time frame, if you go to the 15 minutes time frame, what you're going to be seeing right within this short space, or distance, is lower highs and lower lows. And as the market is creating lower highs and lower lows, you see it was approaching a previous strong zone which it was consolidating previously. So you can see the market started buying again, and it bought nicely, but on getting to this and approaching this high where the market got to previously, you see started consolidating, started creating higher highs, but this time around the lows were equal. This another sign of reversal. Then the market also reversed from this zone back to this level. So if the market comes back to this level, once the market had bought, if you notice when it bought from here, or you came to see the market at this point, know that what the market is trying to do, if it can come back to this zone and close below, it is actually going to be a double. It's going to be forming a double top at this point, and this is actually going to be the neckline. So what you want to see is the market breaking out of this zone and closing below. Then you take your entry. Then you target any low, so any somewhere around here. And this is the 4 hourly time frame. You make so much profit. Then you see, now based on my strategy, if we want to look at this as a continuation pattern, there is this thing I want you guys to understand, because you may want to see this as a continuation pattern. Market has been creating. The market was selling briefly. Let me just say the market was selling briefly from here to here, then it started creating higher highs and higher lows. You would expect the market to, after getting to this low, to continue selling to the downside. But you should understand also that on the market, selling to this support zone, this is a strong support zone in the market. You understand, on this time frame, you can see the market activities around it. Look at the candlesticks, look at the consolidations, look at the higher highs and higher lows the market has been creating. Once you see that market has started creating higher highs and higher lows, or you start seeing too many candlesticks, the market starts printing too many candlesticks around a particular place, know that there's a chance the market is actually going to change direction. See the way it was moving from here with just single candlesticks, but on getting to here started creating double candlesticks. You see, then we have so many candlesticks. This is an indication that the market is actually going to respect this zone. You see, it started creating higher highs and higher lows. This higher highs and higher lows is also another way of telling you the market is going to buy for a little while. Once it gets to another resistance zone, it is going to sell. So it got to this resistance zone, which is actually the neckline we saw here. You see, it started selling. You see the sales. The market sold nicely. All right, so on selling, and it started creating another impulsive correction here. You see a very nice candlestick, then it started having so many candlesticks again, then it started buying. The same thing happened here again, it sold. So now, once this one happens, once this happens, guys, the best thing you will do is to look for a way to place a trend line, just place a trend line if you want to follow it, because there are some people that trade just a single pay and they want to wait for the pay to give them what they want. There's nothing wrong with that, guys. There's nothing wrong with that. You can just stick to a particular pair. Then you must always be patient enough to wait for the pay to actually give you the correct setup that you can trade from, not just any setup. I mean a very correct setup like the one on a higher time frame like this. And if you are basing your analysis on just your trade on a particular pair, you might stay for like 2 days without trading, just like what happened here. Let's say you took this opportunity here from here to here. This was happening 16. This happened on the 16th of December, I guess 16th of December, and the market started buying again. Maybe you got another opportunity at this point. This should be 20th of December. Then you got another opportunity. It might take you days, but once you get a good opportunity, it will really work for you guys. You'll make so much profit. So you can see the market got to this zone. On getting to this zone, you just look out for the price action that tells you the market is going to sell. All right. Then you enter some sales. That's some sell trade. Initially the market got to this zone with this, it was rejected. You see, there was a rejection here. Then the market sold, got back to this level. There's a trend here. There's a trend here that buys, a buying trend here. So the market, you see, it rejected and started buying again. Got back to this same zone, got rejected again, and got back again. You see, if you're able to notice these things, you just wait for the market to do well. After it's sold down, just wait for the market to break out. Know that there's a chance the market wants to continue buying. And mind you, before you even do this, going to a much higher time frame to change the overall direction of the market is very important, because if you can just wait for that, wait for the market to give you setups in that same direction, there's a very high chance of you making some good profit. Because if the market doesn't give you that setup and then you try to trade, then you must be very careful. But there are times the market will be very strongly bullish. Then you must need for a bearish setup, especially when the market has gotten to a strong support zone, sorry, resistance zone, which you expect the market to possibly change direction. All right, so you can see what the market did here. It broke above here, then came back to retest this resistance line. Then it bought nicely, broke above here, pulled back and continued buying. All right, then then you can see, so the market started creating higher highs and higher lows at this point. The market started creating higher highs and higher lows. So now if you can also say, okay, since the market is creating higher highs and higher lows, then you start looking for buying opportunities. You start looking out for buy opportunities. You see, these things are very simple, guys. These things are very, very simple, guys. You see, just try to, let me get this outline. All right, let me see something. All right, so you see, the market was buying, the market started creating higher highs and higher lows, higher highs and higher lows. All these are very, very important. And also take note of the zones the market has created while it is moving. While the market is moving, take note of the zones the market has created. For example, I can see a strong level somewhere here. There's a strong level somewhere here. This zone here where the market bought from. Let's see. All right, so you can see there is a zone here. Market sold from here and also bought from this same zone. You can see that here. All right, so in that case, you just wait. And also, once the market is creating these patterns, guys, while the market is buying, also look at the chart pattern the market is creating. If you can understand the chart pattern the market is creating, it's of advantage. It will make you be very sure of your analysis. For example, now you see we had a market selling from here, creating lower highs and lower lows. Then it finally broke out of the trend line, then started buying, pulled back and corrected. Now we can see that this is actually a head and shoulders pattern, an inverse head and shoulders pattern, which it tells us the market is actually going to buy. All right, so if you're able to detect this on time, you will see that this is actually a neckline. This is actually a neckline which the market got to, then reversed, put back, then started buying massively. If you get your entry, you get a good entry, you make so much profit. And based on a higher time frame analysis, you may know that the market will be buying up to this level, or even if you can enter the trade somewhere around here to take your profit around the guys, you will make some profit. You make some good profit. If you have a good analysis, you will always look for a reasonable lot size to use for your analysis, for your trades. For example, let's say you were just able to enter the trade here with a lot size of 2.0. Let's just take 2.0. Then you entered your trade around let's say when the market pulled back, because there was a change of character, the market pulled back Then let's say you enter the trade somewhere here after the engulfing candlestick pattern, then you are taking your profit around here. This is over $200 in profit, guys. If you're taking your profit just here, this is over $200. Why would I want to put my entry at this point? You see there's an engulfing candlestick pattern right here after the market pulled back, and there was a change of character. There was a change of character. So market pulling back, market coming down is just a pullback to continue buying. So you just continue buying and take your profit around this zone, which is over $240. Then you wait for the market to do whatever it wants to do. So these setups like this can happen maybe once in, maybe twice or three times in a week, if you just try to exercise patience and wait for them to form. It will reduce your chances of losing money frequently, every day, trying to trade setups that you are not even sure of. If you have very good setups like this, you see you make so much profit. All right, so you can see the market bought and then it got to this level. Let me just reduce the size of this line. You can see it went above this level, then retested at this point and then continued buying. Now at this point, trust me, this is a double top here. Let me zoom. You can see, if we go down this setup here what we have is actually a double top. If you go down to the 1 hourly time frame, you will confirm that that's actually a double top. And then what we do, let's check the 1 hourly time frame. Let's see what the 1 hourly time frame. Where did we? Okay, yeah, look at it here. This is actually a double top at this point, and you can see the market consolidated here very nicely, and then it finally broke out. So all these things are the things you should be looking at on the chart. Once you notice consolidations, you notice some kind of market movement, it is something that will help you make profit in the market. The market movement, you see, after it broke out of the consolidation, what do you see again? It started creating lower highs and lower lows, lower highs and lower lows. Then it broke out of it, then started buying again. Let's see. Look at these guys. All right, so look at this. We have the market creating lower highs and lower lows. You join your trend lines and wait for the market to break out again. You see, the market finally broke out. Now, also take note of this. Before the market broke out, it had to come to this zone we marked here. This is a strong zone. If you're patient for the market to get to this zone, then you watch out for the reactions of the market at this point before you can think of taking any entry. All right, in some cases I would want to wait for the market, because if I start noticing some kind of consolidations like this, I want to wait for the market to break out of this consolidation, close above, then I take a trade. My first profit will be taken around this zone. My first profit will be taken around this zone here, and this is the 1 hourly time frame. Trust me, guys, you make so much profit. All right, so these things are very simple things you just need to be looking out for. Just watch out to see the kind of patterns the market is creating, and if you can be doing this on a higher time frame, it will increase your chances of actually succeeding in your trading journey. It will give you more chances. Like now, let's say we have another setup around here. There's another one here. The market has been buying, creating higher highs and higher lows from that where I just drew the trend line. You can see it finally broke out of it, but you can see that the distance from the zone we drew with the black line is not too far. So any trade you enter around here then should be a very short scalping, else you will lose your money. All right, then you notice the market also started creating these higher highs and higher lows again. See what it did. So you can just join your trend line again and wait for the market to actually break out and change actually break out, you understand, like here. If you can learn to join this line, these highs and lows, just like this, guys, it will increase your chance of making profit. All you need to understand is that the market will always give you these setups every day on the chart. The market will always give you this kind of setups every day on the chart. You just wait. Once you notice the market, it was selling, then it started creating highs and higher lows, then you wait for the market to start selling, then come to break out of this trend line, then you find an entry. But if the market buys and gets to a zone which has been respecting, like you see the market bought to this zone at this point, then sold, bought again to this same zone, then sold, then you see the market, while forming this pattern here, bought up to this same zone again. What do you expect? The market is actually going to sell now. The market is actually going to sell. So you actually then wait for the confirmation it is going to sell. You wait for the confirmation, then you enter your trade at that point. Once you find a confirmation, get a good entry, set your stop loss, and allow it to happen. Mind you, you are predicting the market. You do not do the market. So whatever you do, as long as you are predicting the market, also have in mind that the market can go against you. So your stop loss must always be set. No strategy is 100%, guys. No strategy can always make you win. There are sometimes you'll be losing, but as long as you know where to set your stop loss, you know what you're doing. You cannot be in total loss. You must be profitable trading. If you know what you're doing, you'll be profitable. You have some little losses with massive profits, guys. All right, so it's very simple. Or just learn to understand market movement. See the market creating higher highs and higher lows. Just join them with trend line and wait for a breakout. All right, once there is a breakout and a close below, and once there's a breakout, it doesn't guarantee the market is ready to buy or to sell. For example, let's see this one here. You can see what we had here. The market actually broke out of this trend line at this point, but I did not sell immediately. Let me get this other arrow line to show you what I mean. The market broke out of this trend line at this point. You see it rejected, went back in. If you look at this on a 15 minutes time frame, this might be about 2 candlesticks or so. The market formed down, which will make you feel the market has actually broken out, but it's not. Then you can see the market broke out, then still came back to retest, because the actuals, after breaking up this trend line, the market also has to break out of this other zone here, which it has been respecting. You can see where it has been buying from. So if the market breaks out of the trend line without breaking out of this particular zone too, there is no way the market can continue selling. So you can see this is the actual breakout here. This bearish candlestick is the actual breakout to be looking out for, and it sold, then did a little retest, and then sold nicely to where we have this support. So you need to take note of those things. Market movement, use trend lines, mark out some key levels of resistance and support zones, then get a good entry, you trade, guys. If you start practicing these things, one thing that I'd advise you is this: you must not hold trades while you are practicing, especially in real accounts. Try to, if you are using a real account, to trade it while you are still learning to use it. Once the market gives you a reasonable profit, you close. Don't want to hold the trade till the market gets to the next support or resistance. Just close while you are practicing real time. You build that confidence to hold the trade for a longer time. All right, so that's the only thing I think you guys can do, and it will really help you if you can practice this thing I'm just showing you. It's all over the chart, guys. If you cannot find it on a particular page, go to another page. Just be checking on maybe the 4-hourly time frame. Just go to the 4-hourly time frame and be checking what the market is doing. If you see it giving you a higher high and a higher lows, then higher highs and higher lows, you draw a trend line. Lower highs and lower lows, draw trend lines. Mark out your key levels, your resistance and support zones. Once the market gets there, you check your price, check the price actions, you wait for a breakout if it is on a trend line. All those things, guys, it's very important. Just take note of these things I'm telling you. You can use a pen and paper to jot down, then you'll be practicing them accordingly, guys. Trust me, you will succeed. All right, so like this video, share it in the comment section. All right, then subscribe to this channel if not done that yet. Our challenge program kicks off on Monday. That is 3rd of is it 3rd or 2nd of February? That should be 3rd of February 2025. So if you are yet to join us now that you still have time. All right, so see you guys in my next video. Lest I forget, my Telegram channel, there has the link in the description of this video. Please click on that link to join the channel so you can get more information about my mentorship and on the challenge program. All right, see you guys in my next video. Stay blessed and peace out. Bye.